Hey everyone, and welcome. Have you ever tried to figure out what exactly cryptocurrency is? I mean, it's a word you hear everywhere, but it can feel, well, super complex. So, for the next few minutes, we're going to pull back that curtain and really demystify the world of digital money, from the big ideas all the way down to the nuts and bolts. So here's the game plan. First, we'll cover the basics. What is this stuff? Then, we'll pop the hood and see how the engine actually works. After that, we'll get into why it has any value at all, then a quick tour of all the different types out there, and finally, we'll look at how it's actually being used out in the wild. Sound good? All right, let's jump in. Let's kick things off with the one huge question that really started this whole thing. What if money wasn't controlled by a central bank or a government? What if it was truly global, totally digital, and belonged to the people who actually used it? Just keep that idea in your head, because that little spark is what ignited the entire crypto revolution.
All right, time to build our foundation. Section 1. What is cryptocurrency? Let's get into the big idea.
Okay, so here's the textbook definition. A cryptocurrency is a digital form of money. Pretty simple so far. The crypto part, that just comes from cryptography, which is really just a fancy term for the super advanced encryption that keeps everything secure. But the words you really need to focus on are decentralized and no central control. That means no single bank, company, or government owns or runs the network. It's powered by its users, for its users. And it's grown so far beyond just being digital cash. This tech is now the backbone of a whole new digital economy. We're talking about things like DeFi, or decentralized finance, which is trying to rebuild things like loans and savings without the big banks. And of course, NFTs, which create true, verifiable ownership for digital things, from art to concert tickets.
Okay, so let's get into our next section and see how all of this magic actually happens. It's time to take a look under the hood at the engine that powers crypto.
Really, it all boils down to three core technologies working together. First, you have the blockchain. Just think of it like a global digital receipt book that's public and can never, ever be changed. Second is cryptography, which we mentioned, that's the security. And third, you have consensus mechanisms. These are basically the rules of the road that let everyone on the network agree on what's true without needing a boss, like a bank, to give the final say.
Now, how these networks reach that agreement is really fascinating. The two most common methods are proof of work and proof of stake. Proof of work, which is what Bitcoin uses, has miners using incredibly powerful computers to solve these really hard math puzzles. It's super secure, but man, it uses a ton of energy. Then there's proof of stake. Here, validators lock up or stake their own coins for the chance to approve transactions. It's a different approach that's way, way more energy efficient.
So for something like Bitcoin, the mining process is basically a global competition. You've got miners all over the world racing to solve that puzzle. The very first one to get the answer gets to validate the latest batch of transactions, adds them as a new block to the blockchain, and for all that hard work, they get rewarded with brand new Bitcoin. It's a genius system that both secures the network and creates new coins at the same time. Okay, so we've got this secure, decentralized digital money. That's cool. But why is it worth anything? Why isn't it just monopoly money? Well, that brings us to Section 3, the value proposition.
The answer lies in this really important concept called tokenomics. And it's exactly what it sounds like, the economics of a token. It's the whole rulebook that defines a crypto supply, its actual use case, and all the incentives built into the system. And this is key. A crypto's value isn't just pulled out of thin air. It is deliberately designed based on a clear economic plan. These pillars are what give a crypto its value. First, supply. Is there a limited amount, like gold, or can more always be created? Scarcity is a huge driver of value. Second, utility. What can you actually do with it? The more useful a token is, whether for paying for things, voting on the network's future, or accessing a service, the more demand there might be. And finally, incentives. Are people rewarded for participating and keeping the network secure? That's what creates a healthy, thriving ecosystem.
Let me give you the most famous example of all, 21 million. That's it. That is the total number of Bitcoin that will ever exist. It's set in stone. This hard cap on the supply is a huge part of its value. It creates true digital scarcity, just like there's only so much gold we can pull out of the ground.
And to enforce that scarcity, Bitcoin has this amazing pre-programmed event called the halving. About every 4 years, the reward that miners get for creating a new block gets cut in half. This means the pace at which new Bitcoin is created automatically slows down over time. It's like a built-in supply shock that makes the existing coins that much more scarce.
But here's the thing, not all crypto is trying to be like Bitcoin. Not even close. It's a huge, diverse ecosystem out there. So for Section 4, let's take a quick tour of what I like to call the crypto zoo.
So you have your classic payment coins like Bitcoin, designed to be digital cash. Then you have smart contract platforms like Ethereum. Think of these less as money and more like giant decentralized world computers that can run unstoppable applications. Then there are stablecoins, which are pegged to something like the US dollar to keep their value stable. Utility tokens give you access to a specific product or service, and yep, then you've got meme coins, which are often driven more by community, internet culture, and pure speculation.
So we know what it is, we've seen the different types. So let's move to our final section, crypto in the wild. How is this stuff actually being used? What are the big risks you need to know about, and what might the future hold?
Right now, sure, the most popular use is probably still investing and trading, but it's growing way beyond that. People are using it for cheaper and faster international payments, they're using DeFi to earn yield on their assets, and they're building what some people are calling Web 3, a whole new version of the internet that's built on these decentralized technologies where users, not giant corporations, have control over their own data.
Now, if you're thinking about getting involved, the most important word is safely. And look, this is absolutely not investment advice, but here's a common sense framework. First, research, research, research. Really understand a project before you do anything. Second, you'll need a secure digital wallet, either a hot one connected to the internet or a cold one that's offline for maximum security. Then, pick a well-known, reputable exchange. And most importantly, manage your risk. Never ever put in more than you'd be willing to lose.
And we have to talk about the risks, because they are very real. Prices can be incredibly volatile, swinging up and down like crazy. Hacks and bugs can happen. The rules and regulations are still being figured out all over the world. And sadly, yes, there are scams out there. But above all, you have to remember, in this world, you are your own bank. There's a saying, not your keys, not your crypto. It means you have total control, but also total responsibility.
So what's next? Well, looking ahead, it's clear the space is growing up. We're seeing huge financial institutions get involved. We're seeing real integration into global payment systems. There's even this idea of tokenizing real-world assets like a piece of real estate or a share of stock and putting it on the blockchain. As the rules get clearer, crypto seems to be slowly moving from a niche hobby to a real piece of the global financial puzzle.
And all of this brings us back to the biggest question of all. Is this technology the next logical evolution of finance, a more open, transparent, and global system for everyone? Or is it the world's biggest and most complicated gamble? The honest truth is, that story is still being written, day by day. But now, you have the building blocks to understand it, follow along, and decide for yourself. Thanks so much for watching.